Welcome back. You're watching The Money Show with me, Kavita Thapriyal. There are plethora of funds available in the market to invest your hard-earned money in, but how do you assess which is the right fund for your portfolio? What are the criteria that one should look at? To help you navigate through this maze, we have Aditya Shah, founder, Hercules Advisors. Also, do not forget to send us your portfolio queries on our WhatsApp number, which is 8657974571. You can also email us your queries on themoneyshow@etnow.tv. Good evening, Aditya, and welcome to the Money Show, where our viewers are online with us, waiting to share their financial portfolios with you. So, Anjali, do I have Anjali on the phone line with me? All right, so Anjali has sent her question, Aditya, and she says that she has just started her first job and she wants to start investing via mutual fund. And she wants to know if mutual fund is the right route to start her investment journey with. So very interesting question, and I really wish Anjali was there on the phone line with us to elaborate more on this. But nevertheless, through Anjali, we can also educate a lot of other investors who want to begin their investment journey but are confused what route to take, what investment instrument to take. So why mutual funds according to you, Aditya?
Ma'am, whenever somebody first saves some money and invests in the market, it is very important to get a guidance about how you have to invest in the market. As you said, there are plethora of funds available and plethora of choices available. How does a retail investor know where to invest? So the first thing that our new investor should really be doing is creating a financial plan per se, where on the plan, right from her insurances right until the end asset allocation, everything will be decided by a financial planner based on her risk profile, based on her goals, and that is what she should be doing as a first step. Now, since she's asking us specifically if she should invest in equity markets or not, see what happens is if you have a illness, you go to a doctor and the doctor will give you a medicine, and that medicine is useful for treating the illness. Here, you don't know where to invest, how to invest in the stock market. So your financial doctor is a mutual fund where a mutual fund will help you decide where to invest in the equity markets. So mutual funds are the right step for 99.99% of the people who don't have the time to analyze stocks and invest in the stocks regularly. The second point. Third point is the investor is relatively new and is not and does not understand the gyrations of the market as of now. So what I have decided to do is I have decided to give her two funds which are really very solid funds and which will slowly and steadily build her understanding of volatility in the market. So I have decided to give her UTI Nifty 50 Index Fund, which is a broad play large cap index fund. And I have also decided to give her Parag Parikh Flexi Cap Fund, which is a very diversified portfolio and will contain the volatility that the investor has. So, meanwhile, when you start investing in these funds, try to have a financial plan properly. Where at certain point in time, if your risk profile does really allow, you can also approach a small and a mid cap fund, considering the fact your age is really young. But that has to be very methodological way, and that has to be slowly steady. Right now, stick to a large cap fund and an index fund, and that's how a large cap fund and a flexi cap fund. Where in the large cap fund you have an index fund, and that's how you should be approaching your investments.
All right. But then ideally, what is the amount that one can start off with? And also, how can one align the financial goals? You know, this question is also pertinent because people like Anjali or investors like Anjali are just starting their investment journey. It's not only important to decide a fund, but also to, you know, align your financial goals and think about your financial goals, the kind of risk appetite you have. So I think a much more amount of homework that an investor needs to done, you know, more than finding just the right fund for themselves. What else you think they should be considering?
Ma'am, first of all, how much should you save? In my opinion, it is expenses equal to income minus savings. So every month, if you make 100 rupees, you have to make sure that 10, 15, 20 rupees, whatever the amount that you are able to save, you have to save. There has to be a balance between living life now and saving. But that 10, 15, 20 rupees must be saved every month. This is called the savings ratio, and one must keep a track on the savings ratio. What is the amount of salary that you are able to save every month? I believe 5 to 20% is a good base to start with per se, considering the fact that there is a lot of inflation that is going to come up. The first point. The second point is As I said to you, once you start saving, you do not go ahead and first invest in the equity markets. You first invest in a financial plan, and a financial plan will help you decipher your goals. What can be your goals? It can be your retirement, it can be your marriage, it can be buying a house, it can be buying a car, it can be buying a holiday. A goal will differ for each and every person differently. Personal finance is very, very personal in nature, and it is not something that can be generalized per se. So start off with creating a financial plan. Pay a good financial planner to guide you with what you have to do and what you don't have to do. Managing money is not a 1 year story. It is a story that will stay with you for a lifetime. So you need somebody good who will guide you with your risk profile, with your insurances, with your investments, as well as your goals. So these are the broad things that you need to do when it comes to savings first.
All right, we move on, Aditya, and I have Ruchira from Mumbai online with me. Ruchira, hi, good evening. How are you doing today?
Hi, good evening. I'm doing well, thank you.
Okay, thank you so much for sending us your question. And you want to start investing in equity mutual funds, and you will be investing for 10 to 15 years. And the goal right now is just wealth creation. And you want to understand the kind of SIP amount that you should be putting in. So a similar question was also asked by a previous viewer. But having said that, 10 to 15 years wealth creation, any approximate amount that's you have in mind?
Well, not as of yet because I am new to the world of mutual funds and I don't want to gather more knowledge before I actually start investing. And what I really do want to know is if equity mutual funds are a good place for me to invest.
Okay. All right, definitely. You have that longer time horizon, which makes it the app kind of investment where you also earn more than inflation. All right, so the first step for Ruchira, Aditya.
Ma'am, as you rightly pointed out, that aim of wealth creation is a very vague goal that the investor really has. So investor must sit down with somebody and help and take their help to decide what is the amount of money that she will require. That will be dependent on the income and the expenses that the investor really has. So tying your investment with a goal is the first important point that the investor should really start to do. The second point is, as I said to you, the investor is starting off. And again, I will only want to suggest these two funds, which is the Parag Parikh Flexi Cap Fund and the UPI Nifty Next 50 Fund. Since you are starting off, you need to first understand what is volatility in the market. Your funds can also go down by 10, 15, 20%, and you must continue your SIPs per se. And these funds exhibit very low volatility in the market. That's where I'm starting off with. And as you really go on, you have a very long time horizon. In couple of years, you should be starting off an SIP into a mid cap or a small cap fund, depending on the risk profile that you have got. The second point. Third point, what the investor really asked is, should she park money on the equity mutual funds? As I said to you, your money should be parked in all asset classes, which is real estate, debt, equity, and gold. And you should be creating a mix. There's a famous saying that all your eggs should not be in one basket. Equity is good for long-term wealth creation. However, debt is good for any short-term needs that you have got. Real estate and gold are other asset classes. So an optimal asset allocation should be created, but depending on your risk profile, you can be 30 to 60 to 70% equity and rest all other asset classes. So per se, going directly into equity, you should be investing only through equity mutual fund and not other options per se. But diversification across asset classes is very important.
Ruchira, is there anything else you want to know from Aditya?
No, that's it. That was very helpful indeed. Thank you so much for taking my query.
All right, thank you so much for sending us your question. We move on, and next question is via email again from someone called Ruchira, a viewer, and she says that she's 25 years old and willing to invest in pharma mutual funds. She wants to know what kind of pharma funds you might want to recommend and the quantum that she should be investing every month. She already has 11,000 in 4 mutual funds. So Ruchira Sonawat, if you can hear me, I would really like to know the kind of funds you already have in your portfolio, and also very interesting, a pharma fund she wants to include in a portfolio. So a sector fund, do's and don'ts of having a sector fund in the portfolio. Aditya first, let's begin with that.
Ma'am, sectoral funds are only for those investors who can time the market properly. Sectoral funds have a sector risk. So if the pharma sector will do exceptionally well, which it did in 2020 and 2021, these funds performed tremendously well. As in 2022 and 2023, the pharma sector did not do really well. These funds are not doing too well per se. So only those investors who can time the market, who know when to enter and exit these mutual funds, should be going ahead and investing in these funds. Pure play per se, a retail investor who has got a job and who does not have the ability to time these funds should not be investing in these funds. You should be investing in a very diversified fund. What a diversified fund really does is it gives the fund manager an option to invest either in small, mid, or large cap across sectors, depending on where the fund manager, who is a specialist in his job, will find some value. So pure play, I will not suggest the investor to invest in a pharma fund per se. Whatever those four funds are, she's not given us the names. There should be some diversified funds per se, together with a small cap fund, considering the fact that she's just 25 years of age and she has a long time horizon. So no pharma fund, a diversified fund, which is nearly about 50, 60, 70% of our portfolio, together with 20, 30% of a small cap fund. That should be the recommendations that should be there for.
Typically, what should be the time horizon to be invested in these kind of funds? Because see, these funds move in a pattern, and a lot of time investor might feel that they are earning a lot of losses if the fund is not performing as per the market trend, because they have their own triggers to perform, right? During those times, how can an investor understand the sector? And also, if you have an entry time, should you also plan an exit out of these funds?
Absolutely, ma'am. Before you plan an entry into these funds, your exit should be very, very clear, because these funds will move in a range. So what will happen is, in 1 year, maybe these funds could give a very spectacular return, but in the next year, it will not give a return per se, and the NAV will go down per se. So what you should be really doing is that analyzing the trends across the pharma sector, which is, again, I am repeating myself, that it is very hard for a normal retail investor with a job to analyze the complex sector of pharma. So pure play, my suggestion would be, of course, a lot of things fly on the social media, but let us try to give the authority to the fund manager to decide where your money should be invested per se. And let's not take a call as a retail investor to invest in these funds.
So that's the answer for you, Ruchira. And with that, it's a wrap on the show. Thank you so much, Aditya, for being on the show and helping our viewers with their mutual fund portfolio queries. And before I sign off, I'm going to leave you with our WhatsApp number, 865-797-4571. You can also email us your question on the money show at etnow.tv. Anything related to mutual fund, insurance, tax, loan that you might want help with, you can send us your queries. We'll get it answered by our experts. Thank you so much for watching. Goodbye.